One stock that has not participated in the year's rally, though, Best Buy. That's one of the reasons that CEO Brian Dunn has announced his resignation. Tyler Matheson joins us now with the details about a CEO shakeup. Over to you, Ty.
Hey, Maria, thank you very much. You know, while the timing may have been a slight surprise, Brian Dunn's resignation after 3 years at the helm at Best Buy was not. He needed a really great quarter, and he didn't get it. The company reporting a big quarterly net loss about 2 weeks ago. Full-year revenues a little north of $50 billion were flattish, and they were well below estimates. Worse, same-store sales have slipped lately in quarter after quarter, with a couple of exceptions on Dunn's watch. That is why Dunn is out, and a new interim CEO, Mike Mikan, a Best Buy board member and a former healthcare exec, is in. Richard Schultz, the founder and one of the largest shareholders in the company, will remain as chairman as they search for a permanent CEO. Now, when I spoke with Dunn not long ago, he said something that may turn out to be prophetic or not. Take a listen.
The story of retail in America is really one of people finding a concept and then scaling it as fast as they can and then slowly contracting, not staying relevant and disappearing.
Not staying relevant and disappearing. Now, whether Best Buy can stay relevant depends on whether the company can artfully capitalize on its considerable strengths and creatively minimize and manage its weaknesses. Let's look at the plus side first. Number one, its scale. It is very big, the biggest consumer electronics retailer by far. 20% market share. Its brand power. Everybody knows Best Buy. Most people have something from Best Buy in their house. Its balance sheet, relatively strong. It's got the geeks, the Geek Squad, and profitable service contracts, and it's got very solid relationships with vendors, the manufacturers. They need Best Buy. Now, among the negatives, too many stores, and those stores take a lot of staff to run them. Big retail real estate footprint. That makes it vulnerable to price competition, especially from very lean onliners like Amazon, and margin pressure, of course. Product mix is an issue, too. Digital cameras just don't sell the way they did in the cell phone age, and in this cell phone age, and neither do music CDs in the iPod era. And finally, there's just been bad buzz around Best Buy. As Yogi Berra supposedly said, the place got so popular, nobody goes there anymore. Add it all up, and you've got a stock that is off about 46% over the past 3 years. That's roughly the time period. There you see it, down 43%, almost 44% after today. That's roughly the time that Dunn took over. That kind of stock performance, Maria, is not a recipe for job security.
Apparently not. Ty, thank you. During Brian Dunn's tenure as CEO of Best Buy, by the way, this company's stock has been down 34% from late June 2009 through the close of trading yesterday. On day number one, without him, it fell nearly 6%. What will it take to get Best Buy back on track? With me now is Anthony Chukumba. He is Senior Equity Research Analyst at BB&T Capital Markets. And joining us from London is CNBC contributor Stacey Widlitz. Good to see you both. Thanks very much for joining us. Anthony, let me kick it off with you. Is this story salvageable in terms of Best Buy?
This story is absolutely salvageable. At the end of the day, as you mentioned, Best Buy did $50 billion in sales last year. The company has a ton of scale. They've got a ton of relationships, with their suppliers. And there are parts of the business that are working right now. For example, they have a growing mobile business. They have a growing business in China. They have a solid balance sheet. They still generate plenty of free cash flow. So they have plenty of time to figure this out, and they will figure this out.
Stacey, what do you think? What needs to be done to turn the ship around? I mean, you could look at other stories, Circuit City. You could look at other companies within this space that have actually gone bankrupt because of changing dynamics in the business.
Right. So it's really interesting. Actually, Brian Dunn became CEO about the time that Circuit City announced it was closing all of its stores. So it was a market share story, and he was a stores person, expert. That's why he was brought in. Unfortunately, as we've seen, these sales are transitioning online, and they've done so at a faster pace than anybody has expected. So, really what they need to do is right-size the organization. Closing 50 stores, which they announced just a few weeks ago, is not enough here. And investors are getting frustrated. They want to see more stores close, and they want to see change. They want to see this company stop parading itself as a growth company and return cash to shareholders.
So do you see Brian Dunn resigning as a positive or negative?
Well, you know what, Brian? Brian Dunn inherited a really tough situation, not only a business that was declining in a brick and mortar, but also some legacy problems, including the UK business, which now was pulled the plug on. But I think at this point, they need to bring someone in there that can transform the store experience. As you were just discussing, they have tremendous free cash flow, so there's certainly not any risk of them going under anytime soon. But really, they need somebody in there that can focus on e-commerce and also execution. There were some missteps over holiday where orders were not fulfilled, and it really disappointed customers.
Anthony, would you say that the next executive to take over this company is internal, or is this an external candidate?
I think it's likely an external candidate. There is one strong internal candidate, Mike Vitelli, who heads up the U.S. business, but I really think that you need someone to come in with turnaround experience, probably with some e-commerce experience, and also with no, sort of prior relationships with management. I think you need some fresh blood in here, and I think that's what we'll likely see.
Well, you got a target price of $30 a share. You have a buy rating on the stock. Is there anything that has happened at this company that should lead us to believe that we should put new money to work in this stock?
Well, like I said, I mean, I think, much has been made about Best Buy's troubles, but let's look at the actual performance. Comp store sales the last couple of years have been down, between 1% and 2%. I mean, we're not talking about this business falling off of a cliff. Free cash flow has remained extremely strong. The valuation is dirt cheap here, less than 6 times my fiscal year 12 EPS estimate, less than 3 times on an EV to EBITDA basis. So at the end of the day, I think you have to be patient here, but I think that patience will ultimately pay off with Best Buy.
So you want to buy this stock at current levels then? Absolutely,
particularly given the pullback today. I didn't understand it. There was a lot of frustration, as Stacey alluded to, with Brian Dunn. So I would have thought that shareholders would have been ecstatic that he was gone. So absolutely, given the pullback today.
All right, we'll leave it there. Anthony, Stacey, good to have you on the program. Thanks so much. We'll see you soon.
Thanks, Maria.